Hey everyone, Taylor McMullen here with the McMullen Homes team coming at you with another real estate report, tips, all that good real estate stuff to hopefully help you make better decisions when buying and selling in Victoria, BC's real estate market. Today with me I have my friend Bobby Smart with Smart Choice Mortgages, and he's going to give us a bit of a mortgage update today. So Bobby, would you mind getting into the fixed terms and all that good mortgage stuff that you're good at talking about?
Yeah, absolutely. Thanks, Taylor, for having me today. Happy to share some insight on the mortgage industry. The market is strong. All the banks got lots of money to lend out. They're eager to get it out. The hype over all the new regulation changes seem to be slowing down, and everyone's getting educated on the process and the procedures of how we can lend out mortgage funds these days.
Nice, good stuff.
Mortgage rates these days, across the board, it costs more to borrow money. Rates are up. We've seen prime go up just over 1% since last July. So the Bank of Canada seems to be pretty aggressive with increasing over time. So July of last year we were at 2.7. Today we're at 3.7 for prime. Five-year fixed rates. Five-year fixed rates these days for a high ratio mortgage or insurable mortgage, we're looking at about 3.44% for a fixed rate, and variable around the 2.7. And if you are looking for a conventional mortgage with a 30-year amortization, rates are a little higher. The cost to the banks is a little higher on that, a little higher risk. So we're looking at 3.79 or 3.2, depending on if you wanted the fixed or the variable.
Yeah, so they're certainly up a little bit higher than they were last year, that's for sure. So I guess a couple of questions I have then. So, as a home buyer, there's going to be some things we're going to want to do to prepare to get ourselves ready for purchasing in this marketplace. Is there a couple of items you can recommend to us? What can a buyer do to help prepare themselves for this market?
What they can do to prepare, we're looking, the best thing to do is get a pre-approval. Get into the office or give me a call, speak to a professional, get your credit bureau checked, because that's, very important. Find out what you qualify for. And really it comes down to three things, good credit, income to pay the loan, and a down payment. So as long as you got the down payment, you should be good, assuming that you can pay the loan.
Interesting. Yeah, no, I find that I always recommend to my buyers, go speak with you first, because, even if they're not ready to buy just yet, it's still important to have that pre-approval, because, then you're ready to go. We don't have to mess around with all the, details when it does come time to write an offer and we do end up in a multiple offer situation. Making that process a lot more smooth will certainly help you when it comes to purchasing. And also, you can tie in those pre-approvals for up to, I think, 2 to 3 months. I think you can. Is that right?
Yeah. 3 to 4 months. So 90 to 120 days, depending on where we go.
Okay, so yeah, I definitely would recommend approaching it that way. Get yourself pre-approved. So, and then some other questions I hear often are around credit rating. So, credit rating often impacts your ability to get pre-approved for a mortgage. Is there some suggestions around that you can share with us?
The biggest questions we have around credit bureaus is, it's simple. I mean, you got to pay your bills, and the track record. You got to look. Your credit bureau shows your skeletons over the past 7 years. So it's important to pay your bills, your credit is calculated based on the length of time that you've had your credit. So when you first got your first credit card or co-signed with your mom, or you also have to use your credit. So you can't just get a credit card, and stick it in the drawer and never use it. You need to be able to show that you're using the credit and paying it off. Another key is to keep your balances under 75% of the limit. So if your credit card limit was $1,000 that the bank gave you, make sure you stay under that 750 mark, because you really don't. If you go into that top 25% of what they've given you, the credit bureau looks at it like you're maxing out your credit that the bank or the credit card company has given you. Other things like utility bills and cell phone companies, disputes, those are some key ones that end up going on credit bureaus. If you have a dispute with these types of companies, they like putting collections on your credit bureaus. So make sure that you don't leave an open-ended dispute with either a utility bill, BC Hydro, or your cell phone company.
Okay, that's great. That's great, Bobby. So I guess we just wanted to keep that short today. We're hoping to do more of these in the future, but we figured, once a month a mortgage update would be appropriate for the real estate realm and for our show. So Bobby and I will likely be collaborating more in the future here. So I just want to thank everyone for watching. Thanks, Bobby, for coming on. And Bobby, what's an easy way for people to contact you if they wanted to reach out and get pre-approved?
Yeah, the old Google machine, online you can reach me. smartchoicemortgage.ca is my website, or you can always you can track me down through the web. Thanks a lot.
Sounds good. And I will also post in the comments below all of his contact information, so if you wanted to reach out to him at any time, you'll have access to those resources there. Thanks for watching, everybody, and until next time.